Hey everyone, welcome back to Corporate Decoder. Today, PC's Adventures Incorporated, ticker P.C.S.E, just filed an 8K detailing a reverse stock split, and I am seeing a classic move that often precedes trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows the company is consolidating its shares, a move that can sometimes be a sign of underlying issues the company is trying to address. We begin with the very basics of the filing, confirming that the company's reporting currency is the United States dollar. This is standard for companies trading in the US market. This document we are looking at is a Form 8. Think of it as a current report that companies file with the US Securities and Exchange Commission or SEC to announce major events that shareholders should know about. These are the big news items that can move a stock. The earliest event reported in this filing happened on the 20th of April 2026. This is the date when the key changes we'll discuss actually took effect. The company in focus is PC's Adventures Incorporated. You might know them by their ticker symbol PCSE. PC's Adventures Incorporated is incorporated in the state of Idaho. This just tells us where the company was legally formed. This means that Idaho is the place where the company officially exists as a legal entity. The commission file number is a unique identifier the SEC uses to track the company's filings. And this is the company's tax identification number, like a social security number for businesses. Their main office is located in Boise, Idaho. And this is their main phone number if you needed to reach them directly. Now, this part of the form asks if the filing is also intended to cover certain types of communications related to securities offerings. These are special rules for specific situations like mergers or acquisitions. For most companies and most filings, these boxes remain unchecked. This is an interesting point. It states that there are no securities registered under Section 12B of the Securities Exchange Act. This usually means the company's stock is not listed on a major exchange like the New York Stock Exchange or NASDAQ under that specific registration. It implies they might be trading on over-the counter markets or a smaller exchange. The company is not electing to be considered an emerging growth company. This means they are likely past the stage where they qualify for certain regulatory accommodations given to newer, smaller companies. We are now moving into how the company is managed and governed internally. This specific item, 5.03, deals with changes to the company's foundational legal documents called Articles of Incorporation, or its bylaws, which are the internal rules for how the company operates. It can also cover changes to the company's fiscal year, which is its financial reporting period. Here is the core of today's news. PC's Adventures Incorporated is making changes to its Articles of Incorporation. This is a significant move. It is effective on a specific date, which is tied to when the paperwork is filed with the state of Idaho, when a new identifying number called a QZIP is issued, and when FINRA, which is the Financial Industry Regulatory Authority, sets a specific date for what is called a record date. All of this is happening because of a 1-for-12 reverse stock split. So for every 12 shares you owned, you will now have 1 share. This section outlines the company's stock structure. Currently, the company is authorized to issue 32 million shares in total. This is split into 20 million shares of preferred stock and 12 million shares of common stock. Each share of common stock gets 1 vote. It is important to note that these votes are not cumulative, meaning you can't add up your votes to put them all towards one issue. Also, common stockholders don't have preemptive rights, meaning they don't automatically get the chance to buy new shares if the company issues more. This resolution confirms that the reverse stock split will happen to all currently owned shares of common stock. Any fractional shares that result from this split will be rounded to the nearest whole share based on who owned the shares on the record date. This means if you end up with, say, half a share, they might round it up or down to a full share. This just clarifies that apart from what is mentioned in these articles of amendment, everything else in their original articles of incorporation remains the same. They are not changing all of their rules, just specific parts. The person signing this document is certifying that the shareholders approved these amendments. This means the shareholders by a majority vote agreed to the reverse split. This approval happened at a special meeting held on the 20th of April, 2026. For a reverse split to happen, shareholder approval is usually a requirement, and this certification confirms they got it. Getting shareholder approval is a critical step in these kinds of corporate actions. Here we see the actual voting numbers. Out of 116,823,148 outstanding shares of common stock, 63,085,815 shares, which is 54%, voted in favor of the amendments. It is notable that no one voted against it and no one withheld their vote for authority. This shows strong shareholder backing for the reverse split. A 54% approval rate is indeed a majority, but it is not overwhelmingly high, which can sometimes be a point of concern in other situations, but here it seems sufficient. This tells us that more details about why they are doing this reverse split and reducing the number of authorized shares are available in another document called a definitive 14C information statement. This document was filed with the SEC earlier, on the 23rd of March 2026 essentially. This 8K is referring you to that earlier filing for the full story behind the decision. This is a rather interesting backstory. It seems that when PC's Edventures Inc changed its name back in 2015, they forgot to tell FINRA. FINRA is the body that regulates brokerage firms and ensures market integrity. Because of this oversight, when the company requested new identification numbers for this reverse split, FINRA flagged the old name issue. The company's director, Michael Bledsoe, then proposed that the new company name be correctly incorporated into the new QZIP number. The board unanimously agreed. This highlights a communication breakdown in the past that needed to be fixed before proceeding with the current actions. We are now moving to the final section of the report, which lists any supporting documents or exhibits. This item details the financial information and exhibits attached to the filing. This lists the additional documents that are part of this filing. This is the identifier for each exhibit. This tells you what each exhibit is. Exhibit 3.7 is the Articles of Amendment, dated the 20th of April 2026. This is the actual legal document that formalizes these changes we've been discussing. Exhibit 104 is the cover page interactive data file. This is an electronic file that makes the filing data searchable and usable by computers, which is important for regulators and financial data providers. This is where the company officially signs off on the report. This is a formal statement verifying that the report is being filed according to the rules of the Securities Exchange Act of 1934. And that the person signing has the authority to do so. This is the name of the company submitting the report. The report is dated the 21st of April 2026, meaning it was filed the day after the effective date of the amendments. The report is signed by Michael Bledsoe. The SUS typically indicates a digital or authorized signature. Michael Bledsoe holds multiple key positions within the company. He is the president, a director on the board, and the principal financial officer. This means he is a top executive responsible for the company's finances. A reverse stock split, like the one PC's Edventures Inc is undertaking, is essentially a cosmetic change. It reduces the number of outstanding shares and increases the price per S-share without changing the company's total market value. Companies often do this to meet exchange listing requirements where a certain minimum share price is mandated. For instance, if a stock falls below $1 per S-share, it risks being delisted from major exchanges. A 1-for-12 split here would take a $0.1 stock, for example, to $1.2 per S-share. Historically, about half of companies that do reverse splits, especially smaller ones, often face further challenges down the line, and many eventually delist. Think about Kodak's reverse split in 2021, a 1-for-20 which sadly preceded its eventual delisting. A $1,000 investment in a similar situation might have seen its value drop significantly afterward, even if the split itself did not immediately reduce the total investment value. The fact that this filing also points to an earlier 14C filing for more details suggests that the reasons behind the split and the subsequent reduction in authorized shares are significant. While share consolidation can be a strategy to attract institutional investors or meet listing rules, it can also be a signal that the company is struggling to maintain its stock price organically. The backstory about the name change and FINRA notification also indicates some organizational or transparency issues that have needed cleaning up. What I am watching here is not just the reverse split itself, but the underlying reasons and the company's ability to grow its business to support a higher share price without further intervention. The fact that they are also reducing authorized shares alongside the split might signal an attempt to streamline their capital structure or prepare for a specific future action. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and check out the Discord in the description.